So what I'd like to do today is kind of give you a sense of the Business of Debt Digital Humanities project that I began at the University of Chicago, and kind of give you a sense of what that project is about, how it supports some of my ongoing research, and ultimately to conclude with where I'm going next. But let me just sort of begin, I suppose, by reflecting a little bit on this conversation in Stanford's inaugural Democracy Day. To my mind, I think it's fitting to consider questions of governance through municipal debt, or how the terms of borrowing, lending, and credit evaluation, and perhaps even indebtedness itself, constrain democratic processes. And I thought Laura's point about ballot democracy and the ways in which it reinscribes racial inequity was a really brilliant summary of some of the things I'm after. So thank you for that distillation. Of course, I don't have time to talk about or really kind of elaborate on the immense question, the relationship between debt and democracy, but briefly by constraints. I mean, constraints even upon liberal democracy, to say nothing of the shackles upon what Du Bois described as abolition democracy. I have in mind the following: the insulation of municipal debt and municipal finance more generally from popular input. At most, the flattening of the life-altering politics of municipal debt into a single yes or no decision at the ballot box. Again, what Professor Stokes, Laura Stokes, described as ballot democracy. And by constraints, I also have in mind the penalties in the form of credit downgrades due to supposed unorthodox experiments in local governance. And unorthodox is, of course, needs to be defined, but at different points in time, whether it be in the face of the threat of socialism during the early 20th century and municipal ownership of public utilities, the ways in which the financial press decried those unorthodox political experiments, all the way up into the present, in which, for instance, experimentation with perhaps universal basic income might in fact lead to downgrades or other kinds of penalties, or perhaps not. What that says about what is unorthodox in the 21st century versus during the early 20th century. These constraints are not natural rules of local governance. Indeed, the circumscription of democracy through municipal debt is the product of historic decisions, furthered, for instance, through the advice of private sector experts who, despite their dismal failures during the Great Depression, still commanded an audience among city technocrats. These questions of governance, or who rules, by whom, and over whom, are questions I take up in my book, The Bonds of Inequality, Debt in the Making of the American City. And I've also written a little bit about racial governance through debt in a recent collection of essays, which again, Laura highlighted, Histories of Racial Capitalism. But for today, I want to spend the bulk of my time making the important, if elementary point perhaps, about the remaking of the municipal bond market. And I want to share with you how digital humanities tools have been useful in this endeavor. So as an overview, I'll talk about the Business of Debt Digital Humanities projects, including its main contentions, sources and methods, as well as some challenges, dive into some of the interactive features of the project, conclude with some remarks about the implications, and then hopefully we'll have plenty of time for Q&A. Hopefully more time than well, plenty of time. So really quickly, one of the things you'll notice, I kind of move between or use interchangeably municipal debt and municipal bonds. So let me just kind of begin by setting the stage and offering a few definitions on the basics of what is a municipal bond. A municipal bond is basically a loan between states and their political subdivisions, cities, in some cases, authorities, agencies, whereby these issuers issue a municipal bond, borrowing from institutional investors. In the mid-20th century, it was certain kinds of insurance companies, always wealthy individuals who were seeking tax-exempt interest income. That is, ways to shelter their income from, at times, high federal marginal tax rates. You could think about municipal bonds as basically mid-20th century versions of today's offshore tax havens, which is a point I make in the book. And they're used to fund critical infrastructure, right? I mean, we're thinking about the cost of a capital improvement project, call it, think about schools or public housing projects even, or certain park facilities, the Bay Area rapid transit project, which I'm sure many of us have been on before, but used to fund capital improvement projects while spreading the cost over an extended period of time, and issued through the municipal bond market. So there's money to be made in the form of tax-exempt interest income, underwriting fees, and so forth. And the size of the bond market is robust. Just to think about the bond market today, an average of nearly $435 billion in new municipal securities, that's of various types, were issued each year in the last decade, noted a recent regulatory report. So we're thinking about a massive market, even if it's often described as a relatively sleepy industry. The main contentions of the project, the Digital Humanities Project, the business of debt, is that that market was not made via abstract processes, supply and demand, moments of equilibrium or disequilibrium, but stitched together by a relatively small number of identifiable actors: financiers working for investment and commercial banks, credit rating agencies with credit raters with historic and upstart firms, bond attorneys, among others. Thus, the Business of Debt project identifies the people on whom state and local governments and their residents depended for their most basic services and infrastructural necessities. And it considers how that industry changed over time from the depths of the Great Depression to the 1980s. This venture is important in its own right. I mean, I'm very much influenced by the so-called new history of capitalism, which at the very least emphasized the political economy of markets, or at least that was one of my main takeaways, the ways in which states shape markets, but also in a desire to kind of think about the specific people and institutions who are stitching together markets, as opposed to, again, seeing markets as the product of autonomous forces. And I think also the Digital Humanities Project, which you'll see in just a little bit, supplements my book, The Bonds of Inequality, providing a more interactive visual way for the reader or user to engage in sometimes dry and often obscure processes of debt. So what I'm increasingly thinking about is the ways in which we can interpret history, and not just through the written form, but other modes of storytelling, and the digital humanities is crucial, as I'm coming to realize. So let me kind of talk a little bit as well about the sources and methods. So I'm going to share my screen really quickly. It kind of all began here. Let's see if I'm able to. Okay, let me try to share this. Give me 1 second. Okay, can folks see this? Okay, so this is this is drawn an excerpt of some investment banks in San Francisco, just as an example, drawn from the bond buyer directory. You could think about these as kind of like the yellow pages for the high finance industry and bond finance in particular. And so one of the things I found were these small directories, size 5-point font. This is around the time my eyes started to go really bad. And so one of the things I was able to I started to think about was, here you have the firm, say for instance, J. Barth and Co., located at 404 Montgomery, a little bit about what this firm specialized in, and the names of the bankers working for the firm. So Vernon E. Kimball, for instance, and Madeline Huisman, which I'll say more about in just a little bit, the kind of gender dynamics of the industry. And so it kind of all began there with these little directories. I don't know if folks are able to see the one from Maryland, but you get the point. And so one of the things I noticed was a kind of curious life of a source, the ways in which these directories were scattered across very different, various libraries. So the kind of borrow direct, and we got these sources. And the plan was to kind of, again, see the key actors, the key firms that had a hand in stitching together the bond market over time by using these directories. And then what I did was compare the directories with historic newspapers from, say, the ProQuest database. So at first, what we did was I took that information and I tried to manually input it all into an Excel sheet. And this is what it looked like. If you could see, let's see. Okay, so tried to come up with columns for every state, and long story short, for the 1931 directory alone, there was something like at least 1,000 separate entries. This just took way too long, and so one of the things we did from there was to I abandoned this and began working with a remarkable set of data scientists at the University of Chicago, Brooke Lugert and Parmenas Singh. And so what we did technology-wise was we used the Book Eye scanner that offered hands-off high-resolution scanning technology. The images went in at about 600 DPI, and then we edited that using Adobe Photoshop to take out the bleed and spots to optimize the contrast. So that's one thing that's also interesting about the directories themselves. Over time, the paper quality gets better, but the early directories, say from 1931, there's a tremendous amount of bleeding. So we had to figure out how to optimize and contrast, and we did so using, again, the Adobe Photoshop program. We applied the Abbey Fine Reader's optical character recognition software. And this left us with some text files that were parsed using Python. And then we played around with the raw data that was then used and put into ArcGIS. And I should say, I want to defer ultimately to the data scientists who were remarkable in using this technology. I asked the questions, they asked me questions. I tried to do my best to get a handle on the technology behind the project. But ultimately, what they produced was truly magical, and I want to just kind of give them their flowers. So some of the challenges was really it's a very labor-intensive process, and we only had one data scientist working on ArcGIS, and this meant limited capacity to develop a clean and more engaging interface. The pandemic disrupted the momentum at the end, but that's not, I'm not the only one for whom that's true. So, okay, that's a little bit about the sources, method, how I came to the project. Let me get into the Business of Debt project itself so you all can see what I'm talking about. So give me 1 second. Let's see that. Okay. Okay, can folks see the webpage? Okay, great, thank you. Okay, 1 second. Okay, so at present, the project consists of 4 components, some more developed than others. Let me give you a sense of what those components are. The first is mapping collapse, and that section really deals with how capitalism's greatest crises affected the municipal bond business. I'll dive into that in just a little bit. The second page is a focus on municipal bond traders. And so again, in the spirit of identifying the specific actors, what we tried to do is we took the decennial directories of the bond buyers directory to trace the locational concentration of bond traders. So one thing you can see, and it's probably no surprise, is the kind of geographical concentration of municipal bond traders, in the Northeast, New York, Boston, Philadelphia, Chicago, and kind of the dearth of bond traders in the Midwest or Middle America, perhaps. And so one question that raised for us was the ways in which municipalities, cities, and political subdivisions of states more generally in this Midwest area were reliant on the financial institutions located elsewhere. And for instance, what did the lack of local investment bankers do or what were the implications, I should say, for the cost to borrow? How were big names rewarded, if you will, familiar names rewarded, if you will, by having financiers in their backyards, and rewarded again by way of, say, lower interest rates. The third page focuses in on bond attorneys. Now, let me just say something really briefly about municipal bond attorneys. This page tries to identify the presence and role of municipal bond attorneys over 50 years, a 50-year period. And so let me say something about the significance of bond attorneys. So pulling from my book, this is one little vignette I would like to share. finance officers in the post-World War II period were advised to outsource the drafting of things like bond ordinances, resolutions, and financial advertisements to only the most reputable bond attorneys. So when one member of the San Francisco Board of Supervisors asked why the city paid the firm Orwick, Dahlquist, Harrington, and Sutcliffe when it could secure an opinion from the city attorney for free, a financier with Blythe & Co. offered the following explanation. The opinion from reputable attorneys was, quote, essential to attract good competitive bidding. We would not touch the bonds without a well-recognized firm's opinion. And this untouchability, if you will, came with higher interest costs, explained a manager with Moody's Investor Service. So what essentially happened as I was doing the research from the dissertation and then from the book was the importance of reputable attorneys, bond attorneys. And so what you'll see here is you can toggle years. So in 1931, and we use a kind of color-coded way of identifying the years here, you have, for instance, bond attorneys in Philadelphia. So you click the data input there, and we see the firm Barnes, Biddle, and Myers. And so there's nothing more beyond just the kind of identification of this firm here, of Barnes, Biddle, and Myers, but it raises the question, who worked for these attorneys? How were these folks considered reputable experts? What was the role of these folks in actually shaping or providing their stamp of approval for a local bond issue? How did that affect the cost to borrow? And again, we could kind of think about how the collection or the growth, if you will, of municipal bond attorneys changes over time. So a lot of overlap, but here you can see Denver showing up, some attorneys in Denver showing up, folks, some attorneys, of course, disappear over time. So that's the bond attorney feature. And then lastly, there's the piece about San Francisco, a kind of deep dive into San Francisco's local bond industry. So I'll share this briefly with you. And I say briefly because these three are kind of the least developed aspects of the business of debt, but I want to share it with you nonetheless. So as you might imagine, for folks, I think Michael Kahn is in the room here, who knows San Francisco well, and I'm sure many of you do as well. You can imagine bond financiers concentrated in San Francisco's financial district. And so one of the things you'll see, I'm kind of move this around a little bit, is you can click one dot, and we again did color coded the change over time dimension or the directory. So here's the directory related to 1961. Again, we have the address, the name of the firm, and the names of the bond traders who worked for that firm. One of the things we tried to do as well was to think about the main office and branch locations, to see where's this firm in particular, DuPont or Francis DuPont and Co. really sort of where's their main location, where are their outposts, how are they communicating among the different branches. So we thought a little bit about the technology here, private wire, and so that allows us to think about how, for instance, not just the bond business changes over time in terms of personnel, but also in terms of the technology used to underwrite, communicates information related to sales, distribution, and so forth. And then also the specialization here. So commentary here on general market, municipal, and revenue bonds, along with some other information here related to telephone communication and club membership, which I can say more about, but basically this supports the argument I make in the book about the ways in which there's not just the business of debt is not just buying and selling, but also learning the pedagogy of bond finance, if you will, by way of club membership, in this case, the Investment Bankers of America. So the other thing you'll note here is a category for gender. And in some cases, there's an entry there, but this actually goes back to some of the challenges of the project. So my general sense, and I feel confident in saying this, is that this largely was a white male fraternity for much of the 20th century. The municipal bond business was. And so one of the things I wanted to try to do was, in addition to identifying the names of the traders or the attorneys in some cases, was to think about the gender composition. But ran into some difficulties because just because I see a name like Hannah doesn't necessarily mean that that was a woman. Madeline, the data entry I highlighted just a little bit ago, lets you know a little bit about the kind of gender composition, but not much about the kind of work being done. But that's something we tried to get at, ultimately had to abandon because we weren't able to cross-check just yet who worked for these firms and to come up with their photos, for instance, or other ways of verifying the gender identity. So another challenge that basically we had to kind of adapt along the way. So let me now kind of give you a deep dive into the 1931 map in particular, and what I think it says about the Great Depression. So perhaps unsurprisingly, we can use these data points drawn from the 1931 directory to tell a fuller story about the Great Depression and how the Great Depression affected the municipal bond business and its impact on state and local governments. So let me again share my screen. Let's see. Okay, can folks see that? Okay, great, thank you. So the first page here, mapping collapse. What you'll see is, again, the kind of density of bond traders. Again, as you can imagine, located, perhaps unsurprisingly, located mostly in New York. So we tried to do the kind of density of bond financiers based off of what was listed in the directory. Chicago shows up. Chicago is represented, but of course, New York, Boston, Philadelphia are also highly represented. So one of the things we did as well was we, in addition to, and I kind of showed you all this in the bond traders, but you'll see this far right. Again, the name of the firm, the cities in which they were operating, the dealers, for instance, as well as their title, and some other information. So in this case, we have A.M. Shank and Company Specialists in Iowa Municipals. And so the specialization point about specialization is important because, again, what we're thinking about is the ways in which there's a kind of national structure to the bond market, of course, but there are also regional inflections. And what you see over time throughout the 20th century is the concern that, for instance, smaller municipalities with less name recognition were essentially facing the problem of credit discrimination, paying a higher cost to borrow for infrastructure, and which could affect local taxes, for instance, which might be used to service the debt, but the ways in which unfamiliar smaller municipalities were effectively disadvantaged within that national bond market. And so, but one argument put forward by bankers, largely in response to the arguments by some that essentially we need another way of raising funds to help these municipalities, basically a way of protecting their province, protecting their domain, was the sense that, yes, there is some form of credit discrimination, but you have local financial institutions who are able to underwrite the bonds of local municipalities, smaller, unfamiliar municipalities, and supply the needs, local credit needs just fine. And so one example would be the ways in which you have A.M. Shank, probably not a big time player relative to Bank of America or other firms, Lehman Brothers, other more reputable firms, the ways in which perhaps this firm, A.M. Shank and Company, was actually effectively supplying credit for municipalities throughout the state of Iowa. So that was one thing we tried to pull out, the specialists. So again, another example, Adams and Mueller, based out of Newark. again, identifying the manager here, Mr. R.V. Adams, where they were located, and specialists in New Jersey Municipal. So in some cases, what we were able to extract as well was not just the kind of the state or regional specialty, but the types of debts that in which these firms specialized, which is important in thinking about it is important in the way of historicizing the kinds of debt instruments over time. So for instance, you might see reference to a general obligation bond or a revenue bond or other kinds of debt securities in 1951, but when you look back at say 1941, less reference to those other kinds of debts. So in other words, if we think about the specialization, we can use that as a way of not just historicizing the people who work for those firms, where those firms were located, but also historicizing debt instruments themselves. To see municipal debt is not just a single thing, but other kinds of debts that firms thought they should underwrite and specialize in. So I think you'll also notice, zoom out, some dollar sign symbols. That's kind of fitting, I think. And so what I want to do is kind of say that we can begin to tell at least two stories about the Great Depression and its impact on the municipal bond business. Can folks still see my screen? Okay. So just as an example, we can think about Merchants Bank and Trust Company of Jackson, Mississippi. And I want to highlight this example here because here's what we did. We not only took the information from the 1931 directory, but we also paired it with information from the ProQuest Historical News Database. So what you'll see here is, again, same information, firm, location, dealers, and so forth. But we were able to pair it with a window here toward the bottom that opens up to some information regarding defaults in Mississippi. And so one of the things I was really struck by were the efforts of financial institutions to protect the credit standing of municipalities in which they were invested. So what this article, what essentially we did was we say, okay, we have Merchants Bank and Trust that's listed in the directory. Let me use in ProQuest a kind of word search function, searching for Merchants Bank and Trust, given the parameters of say January 1, 1931 to December 31st, 1931. What are some of the articles that popped up? In this case, you won't be able to see it in depth here, but essentially it's speaking to the ways in which that firm that was again listed in the directory is trying to play an active role in protecting the credit of Mississippi to avoid a default, and raises question, why? Why? Is it because they were invested in many of those bonds issued by the state of Mississippi that could allow one to go into, say, the annual reports of this firm, Merchants Bank and Trust, to get a sense of, can we disaggregate the assets and liabilities? Can we disaggregate the assets to get a sense of just how much Merchants Bank and Trust were invested in the state of Mississippi? So basically, as all of you know who have experimented with digital humanities, is you don't pursue a digital humanities project necessarily to answer questions. The point is to ask questions through digital humanities projects. And so that was a question that we came to flesh out, or at least to pose. Another example would be the Atlantic National Company of Jacksonville, Florida, which again, dollar sign symbol here. So same information, location, people involved. Here you see Mr. F.B. Childress. And so again, we were able to, well, here have a photo of again, same kind of methodology regarding the historic newspapers to get a sense of the balance sheet, the assets and liabilities. But we were also able to add other kinds of information. So in this case, again, a similar ProQuest historical newspaper. And what this article goes on to talk about is the attempts to, in this case, Jacksonville gets cool bids on bond issue. So here you have the city of Jacksonville trying to issue a local bond issue. And it raised to my mind the extent to which Mr. F.B. Childress, who's active with, again, Atlanta National Company out of Jacksonville, is trying to lead an effort to buy Jacksonville bonds? Or what are the dilemmas between a firm located in the city of Jacksonville in the early Depression in underwriting that local issue or shunning that local issue? Again, what are the kinds of terms and constraints placed upon the city of Jacksonville, who needs to create a market for a local debt issue to finance whatever this issue was financing? And so again, trying to think about the people involved who work for specific firms and how they responded during the early Great Depression, combining the directories from the bond buyer with a bunch of historic newspapers to begin to ask those questions. And so that's one question, right? Or at least one story, that is the problem of defaults, right? How did local governments respond, rely on financial institutions in their backyard to create a market for the bonds they were issuing for sale? And the second story that one can begin to tell using this information was that the bond market was not entirely prostrate. So for instance, a Carlton D. Beck company of Des Moines, Iowa. And by the way, many of these firms are defunct. Actually, we could see firms show up in the directory in 1931, but 1941, they're no longer mentioned. So of course, there's the story of collapse, not just of the market for local securities, but of the firms themselves. We see, again, the information related to the people who work there. One of the things I thought was really interesting here in this case was, here you had Carlton Beck Company that specialized in Iowa municipals, but here they're actively involved in trying to underwrite bonds issued by Cook County in Illinois, so-called relief bonds. They failed in bidding, but they were still active. And so one of the things, again, it goes back to the point of the directories and the specializations in particular tell you a little bit about or allow you to historicize the kinds of debts issued by local governments over time, not always for infrastructure, in this case, for local relief purposes, and also the ways in which that market was not entirely prostrate or quiet, I guess you could say, not a full collapse. So those are just a few examples I wanted to pull out. Again, the 1931 information mapping is a bit more advanced than the others. But let me just kind of move on to the implications. I could not have written my book without the papers of banker Allen K. Brown. The papers housed at the Bancroft Library at Berkeley. And those papers are remarkable because it includes memorandums, newsletters, and basically Brown is trying to teach his colleagues how to underwrite and basically execute the business of debt. And so what was striking about that was there was a pedagogy of bond finance explained to those who were hired to specialize in bond finance. And I used that information to try to teach the reader, first teach myself, but then teach the reader about the business of debt. So Brown was crucial, but surely there were other key players in the national and regional structure of the bond market. And so by identifying the people who stitched together the bond market over time, the Business of Debt Project offers a chance for other scholars, for instance, to consider how bankers with firms located in San Antonio or Louisville or Cheyenne, Wyoming, among other cities, underwrote local and national needs. In other words, we often think about municipal bond. If we think about municipal bond financiers, they're usually as a collective, a set of collective actors, not people discernible with discernible identities and names of people who we can track down and begin to hopefully identify other sources to again flesh out the local structure of the bond market. And I think this kind of broadening of the narrative stage, so to speak, by focusing in on attorneys and traders, has implications for urban history, the history of capitalism, among other fields. Urban history, just as an example, because we often focus so much on, our urban histories focus a great deal on, for instance, labor unions, or what's that?
Yeah, to you.
Say that. Can you say that again, Bijoy? Okay, I guess that was he took himself off mute. In any event, broadening the narrative stage to consider traders and attorneys as decisive actors, and again shaping local governance, the raising of funds, and for instance, shaping redistributionary struggles. But until now, we haven't thought too much about them. And my hope is that the Digital Humanities Project, by identifying those people, will push the field in exciting directions. And as far as the next steps for this project, the first one is to kind of migrate the staging site from Chicago to Stanford, to clean up the data a little bit, to revamp the interface, and to think about whether it's one thing to identify the traders and the attorneys, but what if we were to identify the specific infrastructure projects financed by those firms in those municipalities, and to think about the consequences, for instance, the environmental consequences of an infrastructure project, a sewage system or a water system laid in the ground, the spillage perhaps that maybe resulted not long after, or the interest rates that came along with brokered deals, and how that affected local tax policy or local redistributionary struggles. And so there's a way in which this project, in addition to focusing in on the individuals, could also think about infrastructure more decisively, and again, to relate it to the larger point about governance and redistribution. And for me, I see this as a module within a broader research agenda. My next project is a history of privatization. And I'm interested in using digital humanities methods to explore attempts by debt collectors to chase down so-called scofflaws, or people who refuse to pay their parking tickets, for instance. So still interested in debt, but also that kind of project will be more animated in scope. And so still an interest in debt, but also trying to think about other types of indebtedness and its implication for democracy in post-1970s America. So 12:45, I think I'll stop there, and I'm happy to take any questions about the project, the process, or anything else. So thank you.